Most people think the stock market is where smart people go to make money. But the reality is very different. Millions of people invest every year, and a huge percentage of them lose money. Not because the market is rigged, not because investing is impossible, but because they make the same simple mistakes over and over again. And the strange thing is, most of those mistakes have nothing to do with intelligence. In fact, some of the smartest people in the world lose money in the market. Why? Because investing is not just about numbers. It's about human behavior, and if you don't understand that, the stock market will punish you for it. In this video, I'm going to break down why most people lose money in the stock market, the biggest mistakes beginners make, and the simple mindset shift that can help you avoid them. If you understand these ideas early, you can save yourself years of frustration and thousands of dollars. Let's get into it. When people first hear about the stock market, they usually imagine something like this. You find a great stock, you buy it, the price goes up, and you make money. Simple, but that's not how most people actually invest. Instead, what usually happens looks more like this. A stock starts going up, people see headlines, they hear about it from friends, they see it all over social media, and suddenly everyone wants in. So they buy the stock after it has already gone up a lot. Then something normal happens. The market pulls back, prices fall, and suddenly those same investors panic. They sell right when the price is down. Think about what just happened. They bought high and sold low, which is the exact opposite of how investing is supposed to work. And this pattern repeats again and again and again. The biggest enemy of investors isn't the market, it's emotion. Fear, greed, FOMO, panic. These emotions push people into terrible decisions. When prices are rising fast, people feel greedy. They think, I don't want to miss this, so they buy. But when prices fall, that greed turns into fear. Suddenly the same investment feels dangerous, so they sell. And this emotional cycle is one of the biggest reasons people lose money. Because markets move in cycles. Prices go up, prices go down. That's normal. But emotional investors treat every drop like the end of the world. Another reason people lose money in the stock market is impatience. People don't want to build wealth slowly. They want to get rich fast. So instead of investing, they start gambling. They chase hot stocks, crypto hype, day trading strategies, the next big thing, investments. The problem is, when everyone believes something is the next big thing, the price is usually already inflated. And once the excitement fades, those prices often fall back down. This is why so many people buy into hype cycles right before they crash. A lot of investors believe they can outsmart the market. They think they can buy at the perfect time and sell at the perfect time. This is called timing the market, and it sounds great in theory, but in reality, almost nobody can do it consistently. Even professional investors struggle with this. The market moves based on thousands of unpredictable factors. Economic news, interest rates, global events, investor sentiment, corporate performance. Trying to predict all of that perfectly is almost impossible, and yet many beginners believe they can, which leads to constant buying and selling, usually at the worst possible times. Another silent killer for investors is overtrading. Buying, selling, switching strategies, jumping between investments. Every time you trade, you increase the chances of making emotional decisions. You also introduce more risk. Ironically, some of the most successful investors in history did less, not more. They bought strong investments and held them for years, sometimes decades, because wealth in the stock market usually comes from time, not activity. So how do you avoid all of these traps? The answer is surprisingly simple. You remove emotion from the process. You stop trying to predict the market and instead you follow a system. For example, invest consistently, every week, every month, no matter what the market is doing. When prices go up, you keep investing. When prices go down, you keep investing. Over time, this approach averages out the highs and lows, and it removes the temptation to make emotional decisions. This is one of the most powerful strategies for long-term investors because consistency beats prediction. One of the biggest mindset shifts in investing is thinking long-term. The stock market is unpredictable in the short term. Prices can move wildly from day to day, but historically, over long periods of time, markets have tended to grow. Years matter more than days. Decades matter more than months. The investors who usually win are the ones who stay invested the longest, not the ones who make the most trades. If you wanted to keep investing simple, your philosophy might look like this. Invest regularly, buy diversified investments, ignore short-term noise, and think in decades. It's not exciting, it won't make headlines, but it has built wealth for millions of people. Because investing success rarely comes from brilliance, it comes from discipline. Here's the strange truth about the stock market. The strategy that works best is usually the one that feels the most boring. Consistency, patience, long time horizons. These ideas don't feel exciting, but they work, and the people who understand this early have a huge advantage because they avoid the mistakes that wipe out so many investors. Most people don't lose money in the stock market because investing is impossible. They lose money because they let emotion control their decisions. They chase hype, they try to time the market, they panic when prices fall, but investing doesn't have to be complicated. If you focus on consistency, remove emotion, and think long term, you put yourself in a completely different position than most investors. And over time, that difference can be life-changing. If you found this helpful, consider subscribing. On this channel, we break down simple investing ideas designed to help everyday people understand money and build long-term wealth. Thanks for watching, and I'll see you in the next video.